Hello traders, Gary Wagner here. Just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, November the 5th, 2020, and this is the Daily Report for Gold and Silver. A massive rally in both gold and silver, taking gold up by about 2.5%, taking silver up well over 6%. We are long gold and silver. We are also long GLD and SLV. We will cover our trades when we pull up our technical studies, but first, let's take a look at the price board. Traders, it was an extremely dynamic day and tremendous rally in the precious metals. They moved up in double digits. Of course, we put our trade on the day before the election, and we did take some heat yesterday as we saw some wild swings in terms of pricing. We placed our stop at 1861. We're in at 1899, and the low yesterday was 83. The low today was 1902, so I feel a little safer. And if we get a continuation, which I believe we will, and I'll illustrate that when we pull up our charts, we will look to move those stops up rather quickly. Silver performed even better than gold in just percentage gains. It gained $1.57, 25.46, but the net change was over 6.5%. Now, we've got spot gold, which is still trading. The futures markets will open back up in approximately 20 minutes, but current fix is 19.4830, and dollar weakness contributed about 1/3 of today's gain, but 2/3 of the gain were definitely attributable to traders bidding the precious yellow metal higher. Dollar was down 84 points at 92.57. We're also long GLD. That made a pretty nice move today, gaining over $4 a share at 182.93. And lastly, SLV, that gained about 6% at 23.61. Let's take a look at our technical studies. Traders, this first chart that we are looking at is a daily candlestick chart. I'm going to slowly add different studies to illustrate the point I'm trying to make, and most importantly, where I believe gold could be headed, not so much by the end of this year, but at least by the first or second quarter of next year. The first thing that we obviously see is that we had a tremendous spike. This spike took gold almost $55 higher. We can see very loosely a level of resistance that comes in between here, and it is that series of tops that we definitively broke above. Traders, all I have added to this chart is a basic Fibonacci retracement. It covers the entire span of the pandemic when gold started at 1450 up until the top, the new record high at 2088. What I want to highlight today is really the 23.6% retracement. And the reason is that we so dramatically broke above that particular price point. That's right here. And so the fact that we broke above that is very significant, because what that usually will mean is that a level of former resistance at 1938 is now a level of support. And so that is key and critical. And traders, as you can see, I have added two moving averages. They are simple moving averages representing the most short-term bias, and that would be our 50-day, and an interim term bias, which would be our 100-day, and they are color-coded with the 100-day being in blue and the 50-day being in yellow. As recently as a few days ago, we were trading below the 100-day moving average. Of course, we broke below the 50-day moving average about the middle of September. So the fact that we have seen this dramatic rise take gold pricing above both averages, that to me signals that we could see higher pricing ahead. We'll talk about various resistance points in a second, but I want to add one more study that I think you'll find fascinating. Now, to clearly illustrate this next study, I have removed the Fibonacci retracement And I've added a Fibonacci extension. There would be too many lines to look at without doing that. And here's what we're seeing. First of all, what we are basically doing is we are measuring this rally that started in March, that concluded in August, taking us from 1445, 1450, up to the record top at 2088. We are labeling this a wave 3. We then had a correction, and the correction took us till about the last week of September when gold reached 1847. That's these lows. And so what we're saying is that this current activity is in all actuality a fifth wave. Now, there are a couple of different formulas to go and forecast where we believe gold prices will go to, but I rely on a Fibonacci extension using Elliott waves to guide where to put the different rallies as well as the different retracements. When we do that, what we want to do is we want to look to see what a 0.618% extension would look like and where that would take us. And that's just what I've done by moving this chart down. And a 6.18% extension could take gold as high as $2,044 per ounce. Now, I'm not talking about a short-term move here. This, as I said, could take us anywhere between the first or second quarter of next year. Rule of Elliott wave is wave 3 cannot be the largest wave, so this would be a number that supposedly we could not achieve, but what you'll find is we can add to our Fibonacci extension by simply putting in the 0.78% retracement, which I'm going to do right now. And when we do that, this is yet another target that I believe we could see. And you can see it just drawn in there. A 0.78% extension of wave 3 would take us to $2,350 roughly. So where are my targets? My long-term targets are these two particular price points. They are based upon Elliott wave and Fibonacci extension. So traders, we've talked about our long-term prospects. We've talked about raising our stops. The next thing that I do want to talk about is simply to look at potential levels of resistance that are not Fibonacci based, because the next real level comes in at the top of the market. However, we can easily see a series of tops that come in at about 1975. We can also see this top right here. That comes in at 2025. And besides these two areas, there's really no resistance after that until this record high at 2088. If we see this market continue to move higher, the first level we'll look at for potential resistance is 1975. The second level would be 2025. And then the ultimate brass ring would be a new all-time price high, and that would be above 2088. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.